Hey guys, Akil Stokes here, and as you know, we've been holding a massive event in my live trading room this week, giving free membership to anyone that is on our email list. If you're not on that list, you're going to want to make sure to head over to www.tradingpower.com and sign up for Jason's Forex Market Preview, or just click the FX Live Room link. So you can catch the remainder of our event. If not, you're going to want to make sure you sign up for this YouTube page, because this Friday I will be hosting a live Q&A session right here on YouTube. Now, if you want to decide between the two, you're going to want to sign up in the live room, because before my event starts, I'm going to have a good buddy of mine, Jason Greystone, come in and answer some questions for you guys. If you haven't heard his interview on tradingstory.com, Jason is a former 12-week transformation client. I guess once a client, always a client. He's a recent 12-week transformation client that has graduated from the course, has gone on to become a full-time trader, and is now looking to get into trading education, and will possibly be running a live trading room for the London session, which is going to be pretty cool. So he's going to come into the live room and speak on Friday, and then I'll come in afterwards in the live room and live on YouTube to do some more Q&A. Now, speaking of Q&A, it's been a slow week in the markets thus far, so we've been doing a lot of Q&A with the newer traders in the live room. And one of the subjects that came up this morning was money management. We had a great conversation on what exactly money management is, why it's important, and, well, how you can manipulate the numbers if you want. Have you ever seen those people out there promising 500% returns a year? Well, I'll show you exactly how they do it and why it may not be the most realistic and safest way to trade. So here goes a clip from this morning's live room session talking about money management. Sit back and enjoy. But you can see it's a nice smooth curve for the most part. There's no big drawdowns. We have a little bit of drawdown here from 30% to about 28%, about an 8% drawdown right here. But aside from that, there's no really big drawdowns. And I said that one of the important things about money management is it doesn't really matter. Bring it down a little bit. It doesn't really matter. Money management doesn't really make a difference unless you have a smooth equity curve. Does that make sense, guys? Unless you're a consistently profitable trader, money management really doesn't make too much of a difference in your trading. And that's why, when we're going through the course, we teach it as one of the very last lessons. You can see reading a price chart, Fibonacci, ABCD pattern, double top, double bottom, 2618. All of the technical stuff comes first. Then at the very last module, back testing, trade plan development. Money management is the very last thing. Because it's not important unless you're a good trader first. That's the key. Now, I'll show you a trick of how it works. Let me ask you guys this. Have you ever seen anything on the internet about traders making 300% a year, 200% a year? Give me a yes if you've ever heard that. Yes. Do you guys want to see how it's done? You want me to show you how you can make 300% a year? Here's the trick. Let's take this. This is our live syndicate. This is our live syndicate results this year. So this is all the trading that Jason and I have done, just on a little different spreadsheet. This is the spreadsheet where I track the trades, and if we want to implement money management, we can do it. Now you can see the left side here. These are the totals based on no money management. So a fixed position size of 2 units, 2 mini lots based off Based off a $10,000 account, right? And you can see. Sorry for bouncing this back and forth. You can see at the very bottom here. I don't know why it won't let me do it. Anyway, you can see at the very bottom here. Here's what's important. Over 3,000 closed pips. 63% change in equity, right? Now, if you implement a money management strategy, here's a very conservative one. This is one I would personally use in my trading. If you implement a money management strategy, you have the same results. You don't do anything different in your trading. That 63% becomes 78%, right? Does that sound pretty good? Conservative money management system. You're not really doing anything fancy, but you're able to gain 15% more off doing the exact same thing. Good, but that's not going to sell you a magic system, right? However, let's say I were to take a very aggressive approach. let's say I were to change my delta right here, and this is our multiplier essentially, which controls our smooth ratio money management system. Let's say I were to take this and I would change it to 3,000 instead of 5,000. Watch this number right here. Watch this number. Watch what happens when I click this button. Boom. 89%. What if I changed it to 2,000? 124% return. Uh-oh. What if I change it to 1,000? Whoa, 226% return this far. Amazing. Charles dropped a link, right, to the magic system. Now let me ask you guys this. How many of you guys would be excited about a 226% return per year? How many of you guys, if I told you I had a magic system that I would sell you that you can make 226% off of, and I'll sell it to you for $100, how many of you guys would be buying it right away? I probably would, right? But me back in the day, back when I was that unconscious incompetence trader, just trolling the internet for anything, right? Now, but here's the thing you have to ask yourself, right? What's the downside of that? What's the downside of having an aggressive delta? Too many traders just look at the big picture, right? Too many traders just look at the ending result and say, man, Akil, look at that. Look at that big old boost in my equity curve. 226%. I can do that all year, right? What's the downside? Let's go back to a non-aggressive one. And I want you to look at the change in the position, because that's what money management is, a change in the position size. So we start off trading initial 2 units, correct? And we're going down 2 units, 2 units, 2 units. We're 15 weeks in. We don't get to 3 units. We don't get to 3 units until we hit week 16. Do we ever get to 4? I don't even think so. Boom, we're still at 3 units. What that means is we're trading essentially, despite our returns, we're trading a consistent position size. Now, it's not going to make you the most money in the world, but it's going to protect your capital. And the number one rule of trading is what? For you guys that have been with me for a while, what is the number one rule of trading? What is our ultimate goal? Don't go broke. Don't go broke, protect capital. The number one goal is don't go broke, because guess what? Imagine yourself at a poker table, right? What happens when you run out of chips? You can't sit at the table anymore, can you? They kick you out. As long as you have 1 chip left, guess what? You can play the game. And if you can play the game, you have a chance of making that comeback. So when you don't raise your position size at a drastic, speed, when the drawdown comes, you can see these red areas. This was our summer. When the drawdown comes, it doesn't really hurt us too much. 2% week, 4% week. Excuse me, our worst week, minus 6%, right? Not good, but nowhere near the danger zone. Now let's go back to that trader that wants that 226% return, trading at $1,000 delta. They're going from look at that, 2 weeks in, already changing position size. By the time they hit week 9, they went from 2 units, they tripled their position size by the time they hit week 9. This is all good when trading is going well, but look what happens when they hit that drawdown. Minus 14%, minus 10, minus 15, minus 18% a week. A week, guys. That's way too much. And these are stats based off Jason and myself, who in the humblest way possible, we're pretty decent traders. We're pretty good at conserving capital. We don't take big drawdowns. So imagine you may have double of this. Imagine a 30% drawdown in 1 week. Guess what you're close to doing? You're close to blowing an account. But traders don't see that side of the story. Traders just see, I could have made this much money when, of course, everything is perfect when things are going good, but they don't see the bad when things are going bad. They don't see the danger of it. And you see a lot of these traders out there that are like, 50% a day. I made 50% yesterday. I'll make 50% tomorrow. And that's perfect when the markets are going in a direction. But when that drawdown comes, and we all know the drawdown always comes, right? When that drawdown comes, the question is, are you able to survive that? Or are you going to go broke and lose it all? So that's that's the importance of money management. That's kind of, if you guys ever wondered how people get these crazy returns, that's how you do it. I think I mentioned earlier, if I were doing a trading competition, I would do something like this because the only goal of a trading competition is to make as many pips as possible. In real life, I would never use this aggressive of a delta. I would hate. Now, I've seen stories like this before. I've heard stories from traders, used to be in our mastermind group, of traders that have done really, really well for 5 years. I think one lady brought her account from I swear she brought it from like $5,000 to $50,000 in 5 years, and then she blew it all in a year. And you don't want to be a part of that. Again, my biggest fear is this. My biggest fear is, I'm in a position where I trade full time, so I don't have another job, right? My income is solely off trading and education as well, but trading and education, right? If I blow an account, guess what? I can't feed my family. And I'm not sure how many other skills I have out there to go and get a nice paying job that's going to be able to sustain this lifestyle, this lavish lifestyle I live. So that's money management. The second question I had was about Jason Greystone's new studio. Oh, amazing. The second question I had was about news. Now, we do have news coming out today, guys. We do have... All right, no doubt that opens your eyes up to what trading can be once you can become consistent. And again, the key is you want to be consistent. I said it in the beginning of the clip. Money management is one of the last things we teach in our 12-week transformation course, mainly because it really means nothing if you can't be a consistently profitable trader. It's no difference from me, switching out my car engine for, something with lots of horsepower and not being able to drive it. It's pointless, and at worst, I'm just going to bring harm to myself. Your trading account is the same way. If you try to get too aggressive with that money management, it's going to start off good, but eventually you're going to crash and burn, and your account's going to get blown in the process of doing that. And we don't want to see that happen. So a more professional way to do it is slow and steady, conserve capital, as I mentioned in the video. But once you do get things going, once you do get a feel for what type of trader you are, once you get a feel for the type of drawdowns you take on, the type of returns that you should expect from yourself, then you can really start custom fitting that money management strategy to find that nice area between just aggressive enough, but not too aggressive to get in trouble. So I thought that was pretty cool. So again, guys, make sure you hit that subscribe button underneath this YouTube channel. That's the only way you're going to find out about my live Q&A this Friday, and I will see you guys there. Take care.